This video is going to save you a lot of time and a lot of money. It's primarily focused on new investors who are just about to start their new account or have opened their account and haven't yet started investing. But anyone who's been investing for a year, 2 years, is going to relate with these top mistakes that I made that I want you to avoid so that way you can have a bright investing future. Hi, my name's Steve Coleman, and welcome to my channel where we're turning dollars into change. Or, in this video, we're turning beginners into Buffetts. He looks like he wants to slap me. We're turning beginners into billionaires. Better. That's better. Number one is start with a tax-free savings account, not a personal account. This is a saving program that started back in 2009, and according to the Canadian Revenue Agency website, it's described as a way for individuals who are 18 years or older with a valid social insurance number to set money aside tax-free throughout their lifetime. Got money to contribute? Tax-free. Got revenue from that investment? Tax-free. Withdrawing money from your tax-free savings account? You guessed it, tax-free. The main thing to understand with tax-free savings account is your contribution group. There are penalties if you go over, however, it increases every year. So if you were 18 in 2009, your current contribution level is $75,500. But if you're turning 18 in 2021, you're starting at a contribution room of just $6,000. When I first opened my Wealthsimple trade account, I didn't do that. And as a result, this month, I'm going through the process of selling, transferring the funds, and then rebuying the stocks. So now, all my stock positions are focused on the tax-free savings account, which is going to save me money, and it's going to save you money by starting a tax-free savings account first. And that way, you don't have to waste your time doing what I did. Now, mistake number 2, not diversifying. It's probably because I had a bad experience with my financial institution, paying commission fees every time I made a trade and a quarterly fee just for having an account, that I structured my purchasing of stocks in a way that I put a lot of money into one position at once, not leaving enough to invest in others. And that's the beautiful thing about Wealthsimple Trade. It's zero commission. So you can spend as little or as much as you want and to spread it across different positions and not have to worry about $2, $3, $10 of a trading cost on each of those purchases. This is a pie chart of my tax-free savings account right now. As you can see, there's 2 huge chunks that are 30% or more. So when one of them this week, Brookfield Renewables, experienced some turbulence, my whole account kind of felt the turbulence. Versus, this is what I want to move towards toward the end of the year, where I have my whole portfolio across 20 different positions, and then not one position is worth more than 8% of the total portfolio. The only way to protect yourself is to diversify, to ride the highs and lows of the market and have a healthy account. That's why one of my goals by the end of the year is to own 20 different positions, and not one of them will be worth more than 8% of the total portfolio. Now, number 3. Have patience. We are investing for the long term, so there is no need to check your stock performance every hour, every day. Instead, you should focus your time and energy in looking forward versus backwards. I get it. Investing in stocks is exciting. It can be emotional, the highs and the lows, but we sometimes make really bad decisions when we get overly emotional. And the last thing we want to do is doubt the decisions we've made, the plan we've set out on, and the positions we've purchased. So instead, focus your time and energy on planning the next positions you plan on buying. The simple thing you can do is go on the Wealthsimple Trade app, go to the magnifying glass, check out the different categories that they have. Look for companies that resonate with you. Take a look at the basic stats there. And from there, I would go to Google Finance or Yahoo Finance, dig a little deeper into that company, read about what it's doing in the news, all that kind of stuff. And of course, come to YouTube. Find your favorite YouTuber who's talking about finance. And always, always, always like their channel, subscribe to it. That is the #1 way you can help support them. I only now look at my account right before I'm about to make some purchases. So that way I can see how I'm diversifying, as well as I can see how previous stocks are performing. So if there has been a bit of a dip, I might be able to buy some more at a lower cost and therefore lower my average price. Focusing our time on the tasks that are going to make us more money versus worrying about the decisions we've already made will help reduce your stress level. Because we're in a pandemic. I think we're stressed enough, right? There you go. You just learned the 3 mistakes that I made. That's going to save you time and money. And when you combine that with your own research, you are well on your way to turning dollars into change. Amazing change. I'm really excited for you. Now, if you want to learn about 3 other tips that I gave, check out my first video. I'm going to share it in the end screen there. As well, I've got another video where I show a little bit more of my Wealthsimple portfolio, so you can get a little bit more of a feel for what that's all about. Or if you have any questions about the interface, hey, throw a comment in the question in the comments, not a question, comment in the question, anyways. And I'll reach out to you and we'll get that answered. And I think I should recut this part. As always, thank you so much for your support. And together, let's keep it in the green.